Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. This is the weekend market wrap, and today is actually Sunday. I normally do this on Saturday, but Saturday got away from me. So this is Sunday, October 4th. Hope everyone's having a great weekend. We're going to take a look at the Dow on a daily basis and weekly basis. Got a couple key things I want to point out. Then we're going to look at one of my key indicators, and we're going to look at gold, and then 3 trade ideas that were completed this week. All right, let's start off here with the Dow. Okay, on Friday, the Dow was down over 250 points, had a huge whipsaw day, and then rallied all the way up and closed up 200 points, almost exactly on the high of the day on the close. So huge swing from down to up. Now, the one thing I am seeing on a daily chart here is this looks like a potential head and shoulders consolidation in here. So let me show you what I'm talking about here. So right here, this little shoulder, head, and a possible shoulder. If that's the case, then this will break down and come on down and further come down further. All right, so let me go back to, so that's what I'm seeing. I'm not saying that's definitely going to happen. That's a potential scenario that I'm seeing and I'm like watching for. Now, the wave count I've got in here, this could be a wave 4 completed, or it might still be underway, depending on, sometimes these corrective moves can become very complex. There's like 13 different variations of corrective moves that can happen. There's like three main ones, but then they can combine, and they can combine multiple times. So that's why, you never quite know for sure what you're getting into when you get in here. So right now, I'm still watching. The trend lines are all down. The momentum's down. The other thing I'm going to look at on a weekly basis with the Dow Industrials, look how this thing is turned and rolled over in here. On a weekly basis, the 10 exponential moving average is still the 10, the 21, and the 55 in here. So this is on a weekly basis, but the 10's crossed below the 21, the 21's crossing below the 55. Why do I have this vertical dotted line in here? This is the peak in the 55-day moving average. And since that date, which is, let me zoom back out, I've got it up here somewhere, I believe. The week ending August 28th is when the 55-week moving average peaked, okay? And then it's turned down since then because of this strong move down. The 55-week moving average has not turned down this entire time, okay? Is not turned down since it turned up back in 2009. Now, the other interesting thing, and that's 15 weeks after the intra-week high back in May, all right? So when you look at this on a longer-term basis, this also did the same thing where it peaked on the 55 week moving average, January 11th of 2008. We all know what happened after that. May 5th of 2000, and we all know what happened after that. Very choppy here, and this move down, very swift and strong in this move down. I'm expecting something a little similar to this because the time is just running out on this entire top, but we'll have to just watch and see what the wave count shows. But that's why I was paying attention, especially on the Dow Industrials, with this 55-week moving average. So that's what I'm seeing right now, and we'll continue to see what plays out in here. But the moving average at this moment is now trending down. All right, now the other thing I want to point out is one of my indicators, and I watch several indicators. I share all of that information with the insider members. This is the free video, which is an abbreviated version of what I share with my insider members. So think about becoming an insider member if you find this interesting. The put to call ratio that I monitor, this is the actual reading on the equity only, equity on the stocks, put to call. Okay, it doesn't include indices and other things like that. It's just on stocks. This is the 10-day moving average of those readings. Okay, these readings come from the Chicago Board of Options Exchange. CBOE. So I am not getting an extreme. We got 1 day of an extreme reading. That's level 1 of an extreme reading, okay? That's just, the first level. I'm not getting anything at all that would indicate a strong short-term bottom, even, just even a short-term bottom has been put in. You got to go all the way back into 2011 to see what we're talking about, that some kind of reading that says, okay, we got a bottom that's coming in like we did in August 2011. Now, sometimes this is close to, the timing is fairly close. Sometimes it leads by about a month or so like it did here. But you notice the extreme. We had 10 days in a row of the 10-day moving average and some of the extreme readings we got on the put to call ratio, okay? And before this you got to go back into 2008 where we got several of these kind of readings in 2008. But we haven't had a reading like that indicates, and I'll tell you, on several of the indicators that we've had here in the fall, in August, September readings, have been as extreme as 2008 and sometimes even more extreme on some of the indicators. Not this reading though, not the put to call ratio. So this is what I'm walking. This is just one flag I'm looking for to tell me that a short-term bottom might be in. And the selling might be over for a couple of months or so, but I'm not seeing that yet. All right, that's put to call. The other one I want to look at today is gold. Gold had a nice pop on Friday. I do think that there's a good probability that the downward correction in gold that's been going on for since back here in 2011. Where's this peak? September 2011. I think there's a good chance that this is over. It's been a complex corrective move. We had an ABC zigzag. We've connected that with an X connecting wave, and then a strong A, triangle B, and now an ending diagonal C for Y. So we have the W, X, Y. And so right now, I think there's a good chance I'm watching for this to break out and make a move. This is an ending diagonal. Usually, they make a nice move up to at least the beginning of this diagonal kind of thing, which would be up here top. So, but right now we've got to get this thing going and get above point D here. But Friday made a nice move, and we'll watch for continuation on GLD. Let's take a look at it real quick on a weekly basis. You can just see the picture a little bit better. And you can see the last, we were down this last week, down by 0.82 on GLD. But we had a nice strong week 3 weeks ago, and then a week before last, further up, and then we had a little pullback here. And we'll see what kind of week we have this week. All right, 3 trade ideas that were completed this week. Let me get a drink of water. Okay, the first one is on Caterpillar. So we got into Cat actually in 2 legs. We got in here, and then we did not get stopped out in this move and got a re-entry here. So added to the position, exited the first third of the position here, the second third here, and the last third right down here. It turned out to be a very nice, very profitable trade for us. It was 191% profit return in 13 trading days. So that worked out very, very well. All the details are on the Trade Ideas page, which is available to insider members. Next one is Alibaba. And we entered right here on Alibaba, which was, what day is that? That is the 18th. It exited the first third here, the second third here, and then we were looking for further action down here. I wanted to see an extreme move, and we got stopped out at break even. So once I get that second threshold hit, I put a stop at break even, which means, if I buy the option at, $200, the stop's going to be when I see a bid for $200, I'm out. Okay, because I'm not going to take a loss on the third after I've gotten a profit on the first 2/3 of the position. And that's exactly what happened on Alibaba. And we ended up with 53% profit in 10 trading days. And SolarCity is another one. And actually, I could have had the third here. We entered on this day, got a nice downswing. First third exited, second third exited, and got stopped out on the last third. And I'm going to get a little more aggressive on these down moves. I could have easily gotten the last third down here, but we got stopped out. Still ended up with a 46% profit on the entire trade, 8 trading days. So not going to complain about that. All right, so those are 3 trade ideas that were totally completed this week. I've got several more, 5 or 6 that are still working, and constantly looking at them. Haven't looked at it for this weekend yet. I'll be producing that video for the Insider members here later today and publishing that. So if you're interested, if you like what you see, you're interested in becoming an Insider member, just click on the link on the screen here and come on over and check it out. So I hope everyone has a great rest of the weekend, and we'll talk to you next week.